Hey everyone, welcome back to Main Street Data. Now, over the last few weeks, we've seen heat waves hit the entire United States. From the West Coast to the South and to the East Coast, we've seen temperatures over 90, over 100, even over 110 degrees in some places. It's been absolutely brutal. So that got us to thinking about what are the interesting investment plays that we can look at to take advantage of things like global climate change and global warming. So on this episode, we're going to take a little bit closer look at the company Carrier Global, ticker symbol CARR, to see if this might be an interesting investment to look at if you do believe that the globe is actually getting warmer and there could be some interesting financial implications for that. So this company, Carrier Global, is already about a $60 billion company. As we will see, they've been around for quite a while, but they're already a large established company. Moreover, they went public in around 2020, and since then, they're up well over 450%, which has been a fantastic return on investment. Moreover, to learn a little bit more about the company, we can take a look at their company profile. Now, looking at this company profile, we can see that the company is based in Florida and currently has over 52,000 employees. That's a lot of people. And as mentioned, they went public in March of 2020. Now, the company operates in three main segments. That's HVAC, refrigeration, and fire and security. From doing a little bit additional research on this company, we can see that they're selling off a lot of their fire and security division, as well as part of the refrigeration division. And they really are focusing on the HVAC side of things, trying to be an air conditioning company where that's their main focus. Now, if we click out of the company profile, there's a few more interesting things that we can take a look at from this main dashboard page. The first one is that their revenue growth is still over 8%, which is great. Their gross margin is over 29%, which is also great. They do have a PE ratio of over 48, which is quite high, as well as a PEG ratio of 10, which is very high. But as we'll see, this is still a pretty interesting company to take a look at. If we scroll down, we can also take a look at some of their competitive advantages and some of the risks for investing in this company. One of those competitive advantages is that the company operates in over 160 countries. Moreover, they have a distribution system with over 500 distributors and thousands of dealers worldwide. This is really difficult for a new upstart company to compete with. Just having distribution, even if they have a better product, just getting it into the hands of the right people is not an easy thing. Moreover, this company does have over 100 years of experience with HVAC specifically. So they have a wealth of knowledge. They have a tremendous amount of R&D that they've already done. And they probably they've probably already experimented with a lot of different ways to build HVAC machines. So I kind of look at this company as having a pretty strong moat. It survived World War I. It survived World War II. It survived pandemics, terrorist attacks, floods, famines, depressions, you name it. This company has stuck around, and that's meaningful. On the risk side of it, yeah, air conditioners do cost money. They are susceptible to an economic downturn. You do have competition. Tomorrow, Tesla could release an HVAC system and be a legitimate contender to Carrier Global. Moreover, labor continues to be difficult for them, and we're also seeing very unpredictable weather throughout the world, which probably is a tailwind, but could also be a risk to the company. Now, going back to the moat for a second, air conditioners are really interesting. Once you start living with an air conditioning unit, it's really hard to go back to living without one. I mean, a lot of us are in the United States where we're in fortunate positions where, when the temperature is over 100 degrees, we can flip on the AC and live a decent life. But there's so many people around the world that can afford AC units, but just don't have them. That's just not culturally part of what they do. You see this in a lot of Asia as well as a lot of Europe. And as time goes on, it's not wild to think that this company could sell more and more units in both the United States, but also abroad. Even in an economic downturn, if somebody's air conditioning unit breaks, it's pretty easy to justify trying to spend a little bit of your savings on fixing that air conditioning unit, just because it can get so uncomfortable in the summertime when you don't have a proper air conditioning unit. And the same thing goes for the heating side of things as well. When it's very, very cold out, we adapt to it. We've built all these tools in these houses and buildings to make it more comfortable so that we can live in more extreme environments. But when those tools start breaking, we typically need to fix them pretty quickly. So I do think that this is a very interesting company. Now let's go and take a look at a couple of the graphs for Carrier Global to see if it could be a good investment or not. So the first one we'll take a look at is on the financials tab. We scroll down a little bit. What we actually want to look at is the total equity in this company. So if we get rid of total liabilities and total assets, we can see that the total equity has been going up in this company, which is great. that means that their balance sheet is getting stronger and stronger. They're getting more assets than they have liabilities, which probably means that they are printing money and somehow keeping it on their balance sheet, which is great to see. Moreover, if we keep on going down, we can see that they have been paying a pretty consistent dividend and have actually been increasing it over time. So as the years go by, collecting a dividend every single quarter while you're waiting for the stock price to appreciate is a pretty cool thing. Now, if we go over to the valuations tab, we can see how the PE ratio has been changing over time. This graph is actually a little bit terrifying if you're an investor, where we've seen this company having a PE ratio of well under 10, and now it's around 40. That's a huge change and a big driver for why the stock price has gone up. And this might be a stock where we might want to monitor it. And once the PE ratio comes back down to a more reasonable level, it could be an interesting stock to invest in for the long term and hold on for a couple decades as people continue upgrading their air conditioning units. New houses and apartment buildings and office buildings decide to incorporate air conditioning units into their spaces to keep them cool. Anyway, please visit us at mainstreetdata.com, where we have the best charts and graphs for all your fundamental stock analysis. Thank you.